Good morning. I want to focus on two things today. I want to talk about why, in my view, wealthy people in the third world will start to move their wealth into gold. And then I want to talk a bit about India as an example of the third world. And I want to give some numbers related with India, not so much to talk about India necessarily, but to talk about the third world. Let's look at some of the numbers, data, the IMF, the World Bank, and the international media constantly shows you. What you see here in front of you is data between 2002 and 2012. In that 10-year period, GDP, combined GDPs of the third world, what IMF and the World Bank now call the emerging markets, went up by about 90%. That is an exceptionally good growth of the third world. In the meantime, the advanced countries, the first world countries, grew at a very small pace, according to the international media and the international organizations, only by about 15%. And that's why they want you to focus on the third world and the progress the third world is making. And this had to happen. This is the growth rate charts comparing the third world and the first world. What you see is that except for 1 or 2 years, since the early 1980s, the third world's growth rate has exceeded that of the first world. And it has been extraordinarily good compared to the first world since the early 2000s. And what you see here is the purchasing power adjusted GDPs. What you see in this one is that while in early 1980s, the combined GDPs of the third world was half as much as that of the first world, today the combined GDPs on purchasing power parity for the third world is higher than that of the first world. Something to celebrate? The answer is no. What you have seen, what I have shown you so far is very skewed data, presentation of skewed data that caters to a certain kind of political correctness. Except for China, which is the only emerging market, the third world was the third world and will stay the third world. And I'm going to present exactly the same data from a slightly different perspective in my next few charts. Now, this is the GDP changes that the first world, the first three graphs are the first world countries, the United Kingdom, the United States, and Japan. And the lower three are China, India, and Brazil. This is how GDPs on per capita basis, and remember, what you have to take into account is per capita GDPs. Gross GDPs make no sense whatsoever. If you look at per capita GDPs, what you see is that the third world actually did not grow much, if at all it grew. In fact, most of them actually fell on per capita GDP terms until the 1980s and even until the early part of 1990s. And then there was actually a nice increase in GDP per capita of the third world countries. But if you pay closer attention, what you see is that even after the 1980s, the first world grew much faster than the third world. this is not what is presented to you normally. Let's zoom in a bit. And this is, again, exactly the same data that I showed you in the first 3 slides. GDP on per capita basis for the first world in the last 38 years is the upper graph. And you can see visually how rapidly the first world has grown since 1980s. The third world, in the meantime, has of course grown, but it has been actually very sluggish growth, particularly given the fact that they have started using a politically correct term called purchasing power parity. Most of the confusion is created by the usage of terms growth and growth rate. They confuse the 2 terms consistently. I want to show you how they manipulate these numbers to present a very politically correct aspect of the third world. Let's look at these numbers. US GDP on per capita basis grew by $8,000 approximately in this time duration, which was actually a bad time frame for the United States. Indian GDP in the same period grew from $1,000 to $1,600 US per capita. Now, what they will tell you is that American GDP grew by only 16%, and Indian GDP per capita grew by fabulous 60%. That is what you see in these numbers. But mathematically, you can't compare growth rates to growth rates unless they are at the same basis. United States says GDP is at a completely different base than that of India. What you also see in these numbers is that in this period, United States on per capita basis as much GDP on per capita basis as is the GDP of per capita of China. And United States on per capita basis has added about 8 times that of GDP per capita of India. But even then, there is another problem. The reality is that growth rate, despite the hype, even that growth rate is of the third world is starting to falter. For the last many years, the third world countries are stagnating and losing their growth rate. But they will present you these numbers. Sub-Saharan Africa grew by 1.4% in 2016. And nothing to cry about, really. And they will then very nicely tell you that their population, demography, is their asset, future asset. The problem is, if you do the math properly, the population explosion of Sub-Saharan Africa is happening at the rate of 2.8%. This is actually a humanitarian crisis, in my view, which means that on per capita basis, Sub-Saharan Africa is growing at minus 1.4%. This is a true humanitarian crisis, which will come and haunt the first world eventually. Let's look at some other data. China is the only exception, as I said, among the emerging markets. Were China not in these graphs would look even steeper. Growth rates across the third world is stagnating and falling. As I said, and this is only GDPs, which does not take into account the population explosion happening in the third world. As I said, Africa, Sub-Saharan Africa here would be 1.4. In reality is minus 1.4 if you account for population. I want to glean out, apart from pointing out how skewedly the data is presented, exactly the same data. I did not use any other data than the data provided by IMF and the World Bank. I want to glean out some key elements from what I have spoken so far. The reality is that after the end of European colonization of the Third World in the 1940s, the Third World countries across the board, except for some island cities, stagnated and became worse by the time. GDP on per capita basis across the Third World fell actually until the 1980s and until the 1990s. You just have to look at data provided by IMF and the World Bank. But much worse was actually happening in the Third World. The Third World across the spectrum was becoming terrible tyrannies. And this continued until at least the 1990s. And I'm going to talk a bit more about what happened after the 1990s in my next slide. But there is absolutely no doubt that from the limited base, the medieval kind of per capita GDP that the Third World had in the 1990s, it actually grew from their very low base at a nice pace. But I want to suggest that this nice, seemingly nice growth rate of the Third World was an anomaly, and this has come to an end already. Except for China, and this is the only exception I make from the Third World countries, the Third World is regressing to backwardness. And in my view, it's regressing to Malthusian equilibrium, which means that these people will return to borderline starvation. That is the way these people evolve. Right, so why was the last 28 years an anomaly for the Third World? Now, if you look at literary, art, and scientific contribution of the Middle East, Africa, and South Asia over the last 1,000 years, you will probably come to only figuratively and literally only one thing, and that is the zero. The Third World, whatever growth, economic growth, and whatever reason for they no longer living in medieval existence, and I would only say that about 30% of these people are not living in medieval existence. The only reason some of these people bettered their economic situation was because the free gift of Western technology was falling, the crumbs were falling into their laps of the Third World. But internet, a new technology came into existence in late 80s and early 90s, and a lot of you will remember how telephony became actually very cheap in the later 80s. It allowed for massive pipelines for rapid transfer of technologies from the West to the stagnant and degrading Third World. And that was the only reason the Third World grew in the last 28 years. The problem is that every growth of the Third World was because of extraneous reasons, and those pipelines have been used up. The low-hanging fruit have been used up. Now, of course, there was one country that was fundamentally changing, and that was China. And China not only grew, but it pulled up, it helped out Latin America, Africa, and a lot of other Third World countries. The low-hanging fruit have now been plucked for the Third World. But this is even more important. As I said so far, the last 28 years of seemingly good growth of the Third World was an anomaly. It will not continue. It can all be attributed to extraneous events. But more importantly, what has happened is that institutionally, the Third World's institutions are failing across the board, except in China. And I know there's some interesting news from China coming out recently, but the situation of the third world is getting degraded extremely rapidly. This continued after European colonizers left. And this had to happen because these were European organizations, European institutions, European military, European form of governments imposed on the third world. The third world people are incapable, unskilled, and they have the wrong frame of mind to run those institutions. Those institutions are getting degraded across the board in the third world. Now, what the media does is that it presents these third world countries as isolated cases. Burundi or Congo or Central African Republic or Zimbabwe or South Africa. They might be sugarcoating Zimbabwe and South Africa right now. Despite that, they are entering a nice phase of humanitarian and civil war crisis right now. The problem is that what is happening in these countries, in these third world countries, is nothing unusual. These are not isolated events. These are a part of the same trend, which is that the third world has continued to degrade institutionally, despite that in the last 28 years, they did grow economically. These things were happening at the same time. Economic growth was happening because of the free gift of Western technology. And institutionally, they have continued to degrade because their good people continue to leave, and they simply cannot manage those institutions. Now, this is really the cornerstone of why the third world has continued to degrade since the 1940s, since the time European colonizers stopped administering these countries. The problem is that across the board in the third world countries, and this is actually a very rare occasion when you can find rational conversations happening in the third world. Their operating system, their mental operating system is magical thinking. And this is what you see in Africa, in South Asia, and a lot of Latin America. Institutions, all the tools, the technology, the Western institutions are actually being used in these countries to support their tribal and superstitious ways of life, not to evolve into rational thinking society. Okay. I'll give you some image. This is just an image. I think some words don't necessarily convey what I wanted to say. These were Indians lining up during the demonetization process Indian government was running. And these people supposedly fought for their freedom. Look at the sheep getting beaten up by one goon in uniform. Right. I just wanted to leave that feeling to give you a feeling of the tribalism, superstitiousness, sheepishness of these people. Let's talk about gold. We are here to talk about gold. This was a statement made by World Gold Council in its report, which came out a couple of weeks back. And basically it says that Government of India is establishing gold as an asset class, which will help out the gold industry in India. Now, the reality is that people buy gold not because government helps out the gold industry. People buy gold because people cannot trust their governments. And this is the gold consumption. This is a bad slide, but basically, if you look at gold consumption and compare it with GDP per capita, the countries that buy the most gold are countries that have wretched societies, horrible institutions, bad governments, and dysfunctional relationships. India, Turkey, Saudi Arabia, Iran, Iraq, Vietnam, Thailand, Russia. These are the kind of people who buy gold. Two reasons why the third world buys so much gold. One is that investing in the third world actually makes no sense. I have established and run 2 subsidiaries in India in my last life when I lived in India, and I got sick and tired of paying bribes and left that country. But even then, you can't really generate a positive return from your investments in these countries. Company after company from the first world gets romantic, they go to the third world, and they lose their money. More important than why is there no return on capital in the third world? Because you cannot trust your government, and government is only a symptom of the social problems in these societies. In these societies, ladies and gentlemen, you cannot even trust your own brothers and sisters and friends. That's the problem in these societies. They are completely dysfunctional society. Don't fall for romantic views that people who go and smoke weed in these poor countries and come back telling you about how warm and nice these people are. What I want to suggest is that the last 28 years of economic growth was an anomaly. Institutionally, the third world has continued to fall, and that economic growth party has also come to an end. Let's look at Indian economy just quickly to see how investment works. If I have capital, I don't have any money in India. I refuse to keep any money there. But inflation tends to be 8%. If you keep money in the banks, it gives you negative real interest rate. It has historically been the case in India. A stock market return, compare it with inflation, is less than 4%. Why should you invest in the Indian stock market? A stock market that is full of scams, and your dividend yield is almost negligible. Really, it makes absolutely no sense to waste your money by investing it in that country. And I can go on and on. If I have capital in that country, what can I do? My only option is to buy gold, dig it up in the ground, and hide it even from my friends and families, because they will reach out for it first before the government does. That is the nature of the third world countries. Let's talk about how much gold Indians are buying. You get different kind of figures from different people. The reality is, I'm not bad-mouthing those numbers, because that's the best they can do, but the reality is no one knows how much gold Indians are buying. And the answer is in these numbers. The tax on gold in India is 13.3%. The street price of gold should be 113% of international price, plus all the costs and profit markups involved in importing and trading and selling gold. I can actually go to a gold shop in India and get gold for less than 110% of the international price. But really, this is how every business works in India. So does it mean that these businesses are subsidizing the gold industry, doing some kind of charity? No. The response is in this photograph. Somewhere here is the border between India and Bangladesh. The villages are divided between India and Bangladesh. You simply walk across the border, smuggle the gold into India, and that is where a huge amount of gold comes through. If you did not buy gold from smugglers, you simply cannot do gold trading in India, as I showed in the earlier slide, you would be losing your money. So I just have a minute left, so let me conclude my talk here. The governments in the third world are becoming thuggish, increasingly thuggish. Their institutions have continued to fall, degrade, and fray over the last 70, 80 years, since the time European colonizers left. Investing in the third world never made any sense. In the last 28 years, it made sense. The reason why some of the wealthy people in the third world were investing in the third world. That party is over. And institutionally, as that party ends and the civil problems in these countries increase, it will be the wealthy people in the third world will be in huge problem, and they will be, and they already are, looking at alternative ways to protect their wealth. The reason why, if you look at what's happening in the property market in Singapore, Dubai, mostly being bought by other people from the third world. That is the reason why cryptocurrency has gone up so much. A lot of cryptocurrencies are actually owned by third world people. Gold is becoming very important in the third world. And strangely enough, the US dollar and euro is something that these people treat as gold. This is why I think gold will continue to do very well in the third world going forward. Thank you very much.